Is it better for you to own your home or to rent your home? You could end up being quite surprised. You're going to learn some things that you've never thought about before. Trade-offs to help you consider which way you're better off. I am not a realtor that makes a commission from selling you a home, so relax and settle in for unbiased information that you've never heard before that is going to help you make what could be the biggest financial decision of your entire life, including why paying rent is not the same as throwing money away. You're going to understand everything by the end of this video. Hi, I'm Keith Weinhold. This is Get Rich Education. Most people think that owning a home is a financial asset. That is not true. In fact, the top-selling financial author of all time, Robert Kiyosaki, someone that's been on my podcast 4 times, says an asset puts money into your pocket every month, and a home takes money out of your pocket every month.
Your house is not an asset.
Well, in strict financial analysis, a home is an asset, but Kiyosaki is right in that a primary residence, that is a cash flow drain for you.
So Kenny, you own lots of real estate?
Yes.
Is your home an asset?
No, not my personal residence.
That does take money out of your pocket, but is renting a bigger cash flow drain for you? That's part of what we're answering here. Some people say paying rent is like throwing money away. You have certainly heard that before. Paying rent is like throwing money away. Because at the end of the month, what do you have to show for it? Okay, look, you might have just spent $800 to rent an airplane seat for 6 hours, but you didn't lament about throwing that money away. See, you enjoyed the benefit of using each item, a home and an airplane seat. Yeah, the airplane seat, that gave you the experience of enjoying New York City in Times Square or Yellowstone Park or visiting your family perhaps. Though neither the home nor the airplane seat provide a tangible financial return, you got an experiential return, a return on life. So although owning a home is rarely a good, strict financial investment unless you buy and sell at just the right time, what you really do is you do tie up a lot of money in your humble abode either way. You basically have 4 choices in how you live. You can own your home, you can pay rent to a landlord, you can be homeless, or you can live with your parents. Really, those are your 4 choices. But it's basically rent versus own. Now, it makes sense to rent more often than a lot of people think. In fact, more people are renting. The current United States homeownership rate is 66%. That is down from 69%, which was the somewhat recent peak that occurred back in 2004. As you take a look at the history of the American homeownership rate there, understand that I expect the homeownership rate to fall over the next year or so. And of course, that is because the cost of homeownership has soared in recent years due to higher home prices and higher mortgage rates. More Americans are being taken out of the homebuyer pool and they're being added into the renter pool. Let's look at 18 factors in your rent versus own decision, many of which you've never thought about before. Time. Do you really want to spend any of your weekends at Home Depot or Lowe's or evenings online researching how to fix garage doors or watching YouTube videos about how to fix leaky faucets with pliers? Well, homeowners are going to do that, and it isn't just for fixer-upper type homes. To avoid feeling like you're living in a dated home, understand that you might have to upgrade areas like kitchens and bathrooms every 15 years. Choice, that's the second trade-off. There are more homes for sale than there are rentals, especially at the higher end. But this, like all things real estate, is going to vary by your chosen geographic market. And more homes being used as short-term rentals like Airbnbs and VRBOs, this makes the pool of both sales and long-term rentals shrink. The third is equity buildup. Okay, now this is going to be a real paradigm shift for you if you're new here. Equity is the difference between what your home is worth and how much you owe on a mortgage. Homeowners build equity, renters don't. All right, that matters. But here's what you may not have expected to hear. Home equity is an awful investment. Equity has 0 rate of return because either the presence or absence of equity in your home That has nothing to do with whether or not your home appreciates in value or depreciates in value. And additionally, most of your mortgage payment goes toward interest, not principal. Well, your interest payment alone could be higher than a rent payment for a like property. And by the way, if you don't understand why your rate of return from home equity is always zero, which is shocking to some people when they hear that and realize that for the first time, I'll put the video that describes that right up here for you. The fourth of 18 trade-offs between renting and owning is liquidity. Although most homeowners build equity, that equity is difficult to access. So to tap your home equity, you need to prove to a bank that you qualify again and wait months and incur costs, and you might still be denied access to your equity that's locked up in the property. So houses make terrible banks and renters stay more liquid. And if a homeowner makes an extra principal payment to the bank, if you do that, if you really make any principal payment to the bank at all, and you want to get that money back out, well, understand that the bank is in control. Making a principal payment to the bank is like saying, hey, Mr. or Mrs. Banker, here's an extra $500 principal payment. Don't pay me any interest on it. If I need it back, I'll pay you fees, and I'll try to prove that I qualify again just to access it. So home equity is illiquid. The fifth is opportunity cost. A lot of homeowners immediately tie up a 20% down payment in their home, a big chunk of cash. And again, these are illiquid dollars with zero return. Well, instead, your chunk of money could be earning return for you elsewhere if you're renting. The sixth is sunk costs, and this is an overlooked killer for first-time homeowners. So we're talking about homeowners sinking money into the property, a lot of which they'll never get back again. We're talking about things like mortgage loan closing costs on your purchase day, constant and ongoing home maintenance and repairs and property tax bills to have to meet and utilities and landscaping costs and HOA dues and replacing pipes and repairing roofs and snow removal and roofing and painting costs. I mean, all these sorts of things are never fully recouped, and renters simply bear fewer of these sunk costs. All right, the next one is the seventh consideration in you making the trade-offs and considering whether you should rent your home or should you own your home. And by the way, at the end, I'm going to give you a conclusion here, what I would do and what I do myself amidst all these considerations. I've got some really important rent versus own points coming up, including a bunch that you've never thought about before and you need to. The next one is control. For some homeowners, the peace of mind in knowing that a landlord can't tell you to move is priceless. You have an anchor. That place is yours. You can knock out a wall, you can renovate your kitchen, or you can add a fence, make it all yours. The next consideration is appreciation. Renters don't experience price appreciation, and what's worse, they might even have to weather rent price increases. Homeowners with loans benefit from financial leverage, which amplifies your wealth in an appreciating environment. Inflation becomes a friend, actually, to mortgage debtors because it helps you pay down your loan balance in a phantom way. And that's something that really very few homeowners realize, and that's because your principal and interest payment stays fixed for up to 30 years. And over those 30 years, wages and prices and salaries escalate higher, and it gets easier to pay back that fixed amount. And of course, home values can deflate as well, but that's not common. So the long-term trend tilts strongly toward home price appreciation. The ninth consideration are the tax advantages. Homeowners often receive a mortgage interest deduction and perhaps some other advantages like adding solar power cells to a home. The 10th consideration is mobility. If you're a renter, well, that renting keeps you nimble. So if you get a new job opportunity or a life change like marriage and kids, that mobility is an asset to you. And then on the other hand, homeowners eventually sell, and they're the ones that are beaten up with closing costs and make-ready expenses and sales commissions, and the sum of those, that can shave 10% off the sales price when a homeowner goes to sell their home. Now, if you're going to live somewhere, it's typically less than 5 to 7 years, that tilts toward you renting, and if you're going to live somewhere longer than 5 to 7 years, that tilts toward you owning. The 11th reason is low mortgage rates. Homeowners can still tie up long-term fixed interest rate debt at historically low rates. And you might be saying, well, wait, what am I talking about? Because mortgage rates, they've really been up these past few years. But look, if they go up further, you're going to be glad that you bought. And if mortgage rates go down, like they inevitably will at some point, you can refinance to that lower mortgage rate if you have good credit and assets. So if you maintain good credit, you can play both sides of the mortgage rate game. The 12th consideration is the rent to price ratio. If a home costs less than about $350K, own it, and if it costs more than that, then pay rent. If the monthly rent is under $600 to $700 per $100K worth of home value, then rent it. If rent costs more than that, own it. So this is a formulaic approach that indicates how much home you have the benefit of living in per dollar paid. Now, those numbers are surely fairly general. Regionally, it makes more sense for you to rent on the U.S. coasts and to own in the heartland, but there are numerous regional exceptions to this. It is just a rule of thumb. The 13th reason is community formation, and now this is surely touchy-feely here. Owning your home provides you and your neighbors with a feeling of belonging. Homeowners have more interest in looking out for the common good of the neighborhood, and that's something that really helps everyone. People feel more fulfilled when they're part of something that is greater than themselves. So owning your home, it makes you more anchored inside this sense of community. The 14th rent versus own trade-off is travel. This is so simple, and yet everyone overlooks this. Have you been to New York City, Arizona, Florida, Alaska, Spain, Ecuador? And if you haven't even gotten out to see the very world that you live in, how do you know where you want to live? If you haven't yet traveled much in your life, consider renting until you found the geography that fits your interests. Of course, maybe you know you want to live near family instead, and therefore travel would be less important in your rent versus own consideration. The 15th is personal cash flow. If it costs you substantially more to own a place rather than rent that place, then rent it, and vice versa. This ties back a little bit to the formulaic one I talked about here, but you need to understand that homeowners that divert too much of their income into a mortgage payment are what's known as house poor. And being house poor, that stifles your opportunity to travel and for you to invest and for you to provide opportunity for your family. So don't get trapped into being house poor just because you can stretch to barely afford a mortgage. The 16th is natural disasters. Areas subject to frequent earthquakes and hurricanes and floods, well, things like that, that clearly tilts to the renter's advantage. Even if you're adequately insured as a homeowner, these catastrophes are worse for homeowners. And if you're a renter, have renter's insurance. Look into that. The 17th is consumer advantages. All right, owning rather than renting, yeah, that can give you, say, for example, perhaps higher credit card limits or more favorable insurance rates. And the 18th and final consideration is pets. Homeowners have the upper hand here. You can build a fence or a pen for your pet, and some landlords only allow certain pets and some not at all. All right, so there they were, the 18 rent versus own considerations. Consider, though, that your housing payment is often your life's greatest expense. You're going to be making it month after month, year after year, so it's really worth thinking this through, being strategic, and running the numbers. And you know, when people say something like, you surely heard this before, people say something like, buying a home was a best investment that I ever made, be a little careful with that. They usually didn't consider all of the ongoing costs like I've mentioned here. And yes, there's still a decided stigma with renting, but you don't live your life for the Joneses, you live it for you. So what's the bottom line with what makes the most sense financially, just strictly financially, and keeping the feelings out of it for a moment? Well, because higher rent amounts don't rise proportionally with higher home purchase prices as you get toward the upper end, that upper echelon scale of pricier homes, it is often best for you to be a renter in a high-end home and buy low-cost income properties which you rent to others as investments. Yes, you're actually paying rent to a landlord in a high-end home, and then the best investments are typically low-cost homes in the Midwest and South that you rent out to others. But overall, there is no one definitive factor in the rent versus own decision. And this is because your primary residence, your home, this is exactly where finances and feelings intersect with each other. And if your feeling supersedes any numbers, well then I sure can't tell you that you're wrong to want to own. But now you do understand those real costs. And hey, if you like learning like this, download the Get Rich Education mobile app. That's where you can hear my audio-only podcast or just listen to me every week on the Get Rich Education podcast, wherever you listen to podcasts. Here's hoping that you found rent versus own considerations that you've never thought about before. Hey, watch the next 2 videos put up on the screen here. YouTube thinks you should watch those. They are tailored just exactly to your interests. I'm Keith Weinhold. I'll see you next time.